Okay, let's get straight into it. Ladies and gentlemen, how are you doing? Welcome back to another episode of #beertime. This is, I think, the first of a few special segments that I'm going to bring you, and it's going to be focused mainly around crypto. And it seems to be quite a buzzword these days on social media, in the news, wherever you look. People are talking about blockchains and bitcoins and a whole bunch of new terminology that we're trying to wrap our heads around. And here to help us find out a little bit more about what's going on in the world of crypto, we've got a new buddy of mine. His name's Grant, but I believe we call you Iggy.
Correct.
That why Iggy?
So full name's Grant Igesund. Just obviously being a footballer is a background. I was a professional football player for close to 10 years. And then just on the sports field, Igesund became Iggy, and it just kind of stuck, you know. So throughout my childhood, I was referred to as Iggy, and most of my friends still call me Iggy today.
That's cool. Okay. So when people shout at you across the road, that's usually Iggy.
It's generally Iggy more than Grant.
Okay.
I respond to Iggy a lot faster probably than I would to Grant.
We can obviously go off in a different tangent here, but we have planned to talk about crypto. But I mean, I think when we first met, you did mention that you played professional football, but maybe just give us a background, where and who?
So, I come from a very sporting family. You might probably know my dad more successfully than myself. So Gordon Igesund, former Bafana coach, that's actually my dad. So growing up in a sporting family, specifically one where football was quite the go-to, it was only natural that I'd follow in the footsteps. I started professionally at the age of 15, training full-time with Manning Rangers, which turned out to be the inaugural Premier League champions in 1996-97 season, which was obviously quite an eye-opener for me, being in and around that sort of setup. Amazing. Just as South African football was really becoming full professional at that stage. I was exposed
96 was a good year for Bafana.
96 was a very good year for Orlando Pirates as well. Went into Africa, won the African Champions League. 96 Bafana was powerhouse in Africa. We'd just come off the AFCON. 98 we made the final of the AFCON as well. So it was like a really good time in South African football. And I was having the luxury of being exposed to some of the top players in the game at that stage, just kind of, kept me wanting to follow the dream. I moved to Cape Town 2001, straight out of school, signed for Ajax Cape Town. What actually happened was in 1997, I went to Ajax Amsterdam.
Nice.
It was at the same time Ajax Amsterdam was starting to talk to Cape Town Spurs about the partnership, and obviously the youth, and it's a big driving element. Setting up the academy in South Africa to kind of get some players across to Amsterdam. And I was one of the first South Africans to go over to Ajax Amsterdam.
Awesome.
And it was quite an experience. I was there for 3 months. Unfortunately, I ended up breaking my leg. I got 2 pins in my right knee. I went into a tackle and I fractured my leg at the knee. So finished my schooling. Ajax Amsterdam said, come down to Ajax Cape Town, post rehab, let's see where you are, reassess it, and possibly go back in the future. Signed for Ajax. I was at Ajax Cape Town for 4 years. Successfully so. During that time, I was Young Player of the Year. I was Most Improved Player of the Year in 2 consecutive seasons. I scored a good few goals for them. Obviously, being in my father's shadow, my intention was always to go to Europe. In South Africa, I was always referred to as Igesund Jr., Gordon's son, which is great. I mean, he's incredibly successful, which is amazing. But as someone trying to establish themselves and build their own career, you kind of want to step out of the shadow. So I said to my agent at the time, I want to try to get to Europe. Contract came to an end at Ajax, never signed an extension. Ended up signing a short-term contract with Manning Rangers again in Durban. Went back to Manning Rangers for 6 months. During that time, obviously set up a few opportunities to go to Europe. I went to Greece for a very short period of time. I was going to sign for a Greek club. And at the same time, my agent said to me, there's a club in Sweden that's interested. Would you be interested in Sweden as opposed to Greece? And coming from a Scandinavian background, Igesund is Norwegian.
Okay.
So the affiliation to, maybe going back to Scandinavia could be interesting. I found the Greek language incredibly difficult. I mean, it would be a picture of myself in the newspaper and it would be saying something along the lines of Grant from South Africa, on trial at whatever club it would be. I wouldn't be able to tell you which was Grant or South Africa, any of the words. I would just see my face in the paper and that would be it. And then obviously Greeks they're quite energetic. So when they're just having basic conversation, I'm not sure if they're arguing and about to throttle each other or if they're just telling a joke, So I found it hard. And I was more than willing to obviously go explore Sweden itself. So I said to my agent, cool, let's go to Sweden. Went to Sweden. I ended up signing a contract there. Was there for nearly 3 years, which was great.
Awesome.
Came back from Sweden, played another year here in South Africa. And then I kind of got to that stage where I'd realized a lot of the things that I'd set out to achieve, I'd kind of achieved. I played for South Africa at junior level, under 17, at under 23. I went to the All African Games, obviously playing professionally in Europe. And I kind of just looked at where I was. I've had a couple of injuries at that stage. And I thought to myself, I can go through rehabs and come back. I'm also getting older. What is the longevity of a professional football player? How long do I want to push it? And obviously being financially dependent on the income I was receiving from football, which was great. I mean, from a very young age, I was earning really good money, which was spectacular. And we'll probably delve into that a little bit when we start talking about crypto, because it kind of leads into looking at when you're making money from a career that's potentially short-lived, you need to invest well. And obviously how I started exploring the avenue of crypto and delving down, the rabbit hole, because I obviously saw an opportunity there for investment. And obviously a return on investment. But just going back to the football side of things, I came back to South Africa, played another year for Maritzburg United in the PSL. At that stage, had a really bad ankle injury at the end of that year as well. And I just said to myself, okay, let's look at it. Then I spent 8 months doing rehab, coming back, trying to fight for my form, for my place in the team and everything else. Alternatively, I can take a little bit of the money that I saved. I can invest it into myself, into a business. And should that business go belly up, I've still got a few more years to recoup as much money as possible through football. But should the business be successful, I'm obviously building a long-term career and income generator. Opened my business. Thankfully, things went well. My time was almost better off spent pursuing a career in business. And it got to the point where I just made the decision. I was like, okay, fine. We're going to stick to business. Business, again, the link to crypto is it's a tech startup. We're very fortunate that we registered a patent for a particular product, and then we obviously wanted to ring fence the strength of that patent. So we started building specific tech around the patent and the implementation of such. And it's grown from there. We've been very, very fortunate to run some really successful campaigns. We ran the Springbok 2019 Rugby World Cup Faces or Numbers campaign. So when all the Springboks played with the supporter faces on the back of their jerseys, that was our software that obviously collates and produces the print files.
You've given me so much information, and there's so many
avenues to take it.
different paths, avenues which we can take. So
can we maybe crack the beer? Is it a good time for let's crack a beer?
Iggy, I like you. You speak in my language. Yeah, cheers.
Cheers.
So we're drinking the beer that I've really fallen in love with. It's a Jack Black Cape Pale Ale. Quick interlude. Let's talk about this beer. Then there's so much I want to come back to. Beer. Are you a big beer drinker? I mean, you've obviously come from a professional sports background, and maybe that's changed now, but what's your kind of go-to beer? Yeah,
so it's actually, coming from coming from a professional sporting background, I'd like to say that I'm not much of a drinker, but don't be mistaken, plenty players drink a crazy amount of booze. I, on the other hand, obviously being brought up in a family of professional sportsmen, and my dad was a coach, there was very much, this is the bar. If you want to get to that limit, this is how you have to behave, and this is what you have to do. These are the sacrifices you have to make. So I never really touched alcohol till about the age of 27. I mean, yes, 15, 16, used to sneak off with the boys, go to the beach, surf, and, crack a few beers. But I always knew that my career was aligned to sports, and I couldn't go down that route at that age specifically. So never really had an affiliation to drinking any sort of alcohol till coming towards the end of my career. And then obviously post-career, I could really delve into it and start exploring as one does at a much younger age. So from a beer perspective, I'm still somewhat ignorant, I would say. I haven't delved into the craft market side of things. So CPA, I've had one or two, but I haven't. I'm more of a mainstream traditional Castle Light kind of drinker. Give me a Heineken, give me a Castle Light. I know it's safe and I'm good.
Nothing wrong with it.
But to be fair, this tastes great.
Yeah, this is a great beer. I'm always looking for beers that can kind of be a stepping stone for people to explore beyond the mainstream beers. And this is definitely one of those beers that are in that collection of, try something different, try something new. And yeah, I mean, I'm a big fan. So
nice.
Yeah, very, very happy with what Jack Black are doing. So let's get into it. I mean, there's a bulk of stuff that we wanted to talk about on the show, but we cannot ignore some of the things that you've kind of given me in the first 5 minutes. Firstly, long-time listeners will know that I love segues. I love finding connections. You spoke at length about Amsterdam. My previous guest, Murray from Jump Brewing, he is currently in Amsterdam. So I think that's just poetic how we're making that connection. It's by no planning from my side, but it's interesting to see your journey into crypto, but also your professional kind of mindset. And I want to kind of I can see that maybe there's a link there between the professionalism and also you starting your business. But I want to maybe then find that link between those two things. What was that patterns that you can you talk about it? I mean, what was that business that opportunity that you saw, and why did you dive into it?
So yeah, it's
briefly.
I'm more than happy to chat about that. So my business partner is actually Jean de Villiers, the Springbok rugby captain.
So you're just giving me so much here now.
His older brother, Andre, is my business partner.
Okay, I know Andre from Stellenbosch. So this is mind blowing. Yeah,
I'm sure you've had a few beers with him back in the day. Mm-hmm. So Andre and I are business partners. He's obviously got the rugby connection. I've got the footballing connection. And we just kind of looked at, the idea of putting faces on the back of sporting numbers. And if you really dumb it down, for a lack of a better phrase, the evolution of the sports jersey. So if you go back 20 years and you start watching, World Cup footage with Pele and Maradona, or whatever it may be, you would just see the number 10 on the back of the jersey. Then all of a sudden, Pele started to appear on the back of the jersey, or Maradona, and that jersey became iconic. It became the evolution of the jersey. People wanted to buy that jersey, not just for the 10, but they wanted the name on the back as well. A good example is Paul Pogba. When he was purchased back at Manchester United, I mean, they paid a ridiculous amount of money for him. I wouldn't be able to tell you the figure exactly, but it could have been somewhere around like £90 million. But in the first week of him being back at Man United, I think he sold about 50-60 million pounds worth of merchandise with his name on the back of the jersey. So when you start referencing like sports memorabilia, and we might even delve into that when we get into crypto later.
Definitely.
When you
we'll eventually get into crypto.
when we start talking about sports memorabilia and we start talking about fans and disposable income and that sort of thing, that's kind of what we started playing with. And we looked at the numbers on the back of the jersey, and we decided that's a dormant asset. Every club, whether it be a footballer, whether it be an ice hockey player, whether it be a rugby player, the players are going to wear a jersey that's going to have a number on the back. That's retail space. How do we monetize that? Obviously, wanting to bring supporters closer to the game. We thought to ourselves, well, putting the supporter faces onto the back of the jersey, we managed to get that right. We form a collage. It becomes a one-off item. So whether the team implements, for example, the Springboks in the 2019 World Cup, they had a different set of numbers for every game. So they were able to activate 7 different games, 7 different audience members or fans on each of those jerseys, or they could have done a once-off print and had the same jersey, the same numbers on the game, all 7 games. And because the core was to engage as many South Africans as possible, we chose to do it on an individual basis. But each of those jerseys for Springbok Rugby was absolutely 100% unique. The jersey that was in the opening game against New Zealand is very much different to the jersey that was in the quarterfinal match against Japan. So face is completely different, completely unique concept. And of course, we're activating a different fan, and that evokes different emotion as well. So that's kind of what we're going to. And of course, at the end of the day, when you're opening a business, there's always needs to be the monetary aspect to it. You want to make a difference, but at the same time, it's financial gain. So we looked at an asset which we considered dormant. We were able to monetize it, and not only for the rights holder, but in terms of our business itself, turning it into a little piece of a cash generator.
So you've got that patent on that collage.
Correct. So we've registered numbers 0 to 9 and letters A to Z. Interesting.
Very cool. Again, you just overflowing. You're giving me so much stuff, and I'm sad I don't have a notepad here. Mental note for future. I need a notepad. Just so many directions that we can go in. But I do want to talk about sports memorabilia because I think it's so important, and I think we said before we hit record. There's stuff that we're not too familiar with regards to NFTs, but I think you're definitely a correct person to talk to. But let's talk about let's jump into the crypto space. When you introduce yourself and people ask what you do nowadays, what do you tell them?
I think if you have to open up my Instagram handle, I think the first thing that comes up there is former professional football player turned entrepreneur or something, is a little basic bio. So I like to think to myself as an incredibly entrepreneurial person. I'm relatively dynamic. I like to explore various avenues. So there's a multitude of things. My primary business, as I said, is obviously the faces and numbers element at this stage. There's a few other small projects that I got on the go as well. Primary business being tech startup. And then on the side, there's a couple of passion projects that have almost become, fully fledged businesses within themselves. And I wouldn't call it businesses, but I mean, from a trading perspective, specifically crypto, it's something I spend 4 to 6 hours a day religiously just following markets, looking at the fundamental analysis, looking at technical analysis, understanding what's happening in the market and how I can use that volatility to obviously generate an income or additional income. So I don't talk too much about crypto in conversation unless it's kind of brought up, and then I'll expand on it.
Do you drop a few breadcrumbs for people to?
Occasionally, depending on who I'm with. But it's almost somewhat. I don't know. I've been in crypto for a while, so obviously went through that whole 2017 mania.
Yes.
So I got into crypto probably 2016, late 2016, early 2017. So went through that whole run up to 2017, December, 20,000, December, the peak, when the Bitcoin was the buzzword. Obviously, only having been in Bitcoin for 12 months, probably at that stage, I was still incredibly excited about, oh my gosh, this is life-changing, from what was $900 just 12 months ago is now $20,000, and you've, 20x'd your portfolio. It's mind-blowing.
Lovely.
Exactly. And not really having the foresight of having played in markets that long to understand, it's cyclical. So as much as you have your bear market, you have your bull market, it goes back to a bear market, So $20,000 came and all of a sudden the sell-off started happening. And I was like, okay, well, maybe this is a good time to buy. And I still bought some more because, $15,000 sounded like a discount when it was at 20 just, 3 weeks ago. And continually, purchased along the lines. And then, we really saw the market fall flat. And then Bitcoin almost was taboo. Like people didn't want to talk about it. It was a bubble. It's popped. And I looked at the market and
Netflix took all their documentaries off.
Yeah, exactly.
And I thought, oh my God, there goes my cash. Gone.
Yep. So I had a hard look in the mirror and I said to myself, like, I haven't lost anything if I don't cash out. And then I really started, looking at markets and understanding that, things are cyclical, there are patterns. And if you start going back over the years, You can see when the halvening happened, how the run up happened, how the sell off happens as we start turning into a bear market. And I was like, when I first started getting into crypto, as everyone says, don't invest more than you're prepared to lose. So I looked at it and I started throwing a little bit of money in it, and it started making really great returns. Obviously, threw a little bit more money in it, but it was always money that I was never. No one wants to lose money, so I was never happy to lose that money. But I understood the risk associated to it. So in theory, would have been okay with losing the money, devastated, but okay. But ultimately, by doing that, I also bought myself time because there was no urgency to access that money. So I was like, okay, fine. Let's just leave that to sit for 4 years. So just based on, what's been happening with Bitcoin every, roughly 4-year cycle, every 4 years, there's the halvening, which means, the miners produce half amount of Bitcoin than they would have in the previous cycle. So I looked at it and I was like, let me just hold on and see where this goes. And obviously people are panic selling and the market tanked and people stopped talking about Bitcoin and everyone was almost like frowning upon it. Like, it was a buzzword. Now it's tarnished. No one wants to discuss it. So I just
my dad gave me such shit for that.
I can imagine.
Just saying, look what your Bitcoin is doing. He made it anyway. Yeah, I interrupt, but carry on.
No. So same boat. So I actually ended up probably something you shouldn't do. I actually sold an apartment in 2017 I just thought there'd be much greater returns in Bitcoin as opposed to, sitting in property. I was fortunate at the time that I had a small portfolio of properties and I was like, okay, I'm willing to let go of this one, take some of the profits, and I'm going to, take a little bit of a chunk out of that and put it into Bitcoin and just see where that goes. And fortunately, I did that looking back now in hindsight because, property on the Atlantic seaboard, does incredibly well, but you're not going to get anywhere close to the returns that you would have seen in Bitcoin over the last 6 months, never mind 2 years.
Sure. Just think, again, I think the main reason why I wanted to get you on the show was that when I found out that you were involved in crypto, the main thing that kind of hooked me was that you'd been involved in crypto longer than I had been involved. And I say my involvement is completely different from your involvement. You are miles ahead in terms of, I suppose, the people in my circle, maybe in the people in your circles. But maybe give us a bit of a time frame of obviously the year that was 2020, because when we first spoke, you said that lockdown happened and you really doubled down on your trading. Was I correct in hearing that, or what kind of happened?
So if I had to give you like a full timeline of where we're at. So 2016, 2017, first started exploring, Bitcoin. Obviously, being in a tech startup, you're exposed to, the latest sort of tech, and you're speaking to, for lack of a better word, tech savvy or geeky-ish kind of guys, which is really where crypto kind of evolved.
Yeah.
So I was hearing it in conversation. I was intrigued enough to start doing a little bit of research on it, and the more research I did, the further down the rabbit hole I went. Like, oh, hang on a second. So here's an asset which fundamentally can become a store of value. There's a limited supply. It's already appreciated since 2008 exponentially. Once it starts getting regulated and we start seeing some institutional investment, it's only inevitable that it's going to explode because of the shortage of supply. And then I just kind of started going from there. And it was at the same time Bitcoin mining became a little bit of a buzzword. So my business partner and I, we decided, let's just buy one of these little miners. And we ended up buying I think it was an L3, I think it is called. One of these Chinese pieces of equipment came out of Bitman. I think it was called the L3. Yeah. So it mined Litecoin. We paid, I think, 30 grand for the machine, and it paid itself off in the first 6 weeks. It was just plugged it in. It just, ran quietly in the corner.
It's a physical piece of hardware.
It looked, for lack of a better word, it looked like a PS4 physical
Okay.
piece of hardware. Looked
And
like
you
a
bought it
PS4.
from China.
Bought it from China, imported it, 30 grand, got it in the country, plugged it in the wall, and all it did was it just ran, solved the script, whatever. It ran on
You
a...
plugged it into a computer, or you plugged
No,
it
this was, it's like a PS4. It was like a fully fledged computer. So it needed electricity, and it needed internet connection,
Yeah.
and that was it. And it just ran, and it just kind of solved algorithm, and for every hour that it ran, it started generating a return. And in the beginning, we're doing something crazy like $115 or $120 a day. And then obviously as the hash rate went up, it started, reducing in value. From one day we're making 120, the next day we're making 105, the next day we're making 90. But within dollars. So we ended up paying off within 6 weeks. We paid off this machine.
I have to pause because otherwise you're going to keep talking and I'm going to forget. But that Troy now sitting here can understand what you're kind of talking about. But I think Troy from 6 weeks ago, or maybe last year, or maybe even people listening right now are thinking, what? Like, what do you mean you plug something in and it starts making money for you? Is that money going into your account? Does it live on the system? I think for a lot of people, because I say this because this is where I was, the thought of having something that's non-tangible, you can't withdraw from an ATM, that cash. I mean, what were your thoughts going through at that time, buying this piece of equipment? You assured of yourself that, cool, I'm going to spend 30 grand, get this thing over from another country, plug it in the wall, and kind of see if it's going to
make some money.
If people are speaking the truth. You obviously were in the inside track in terms of technology, as you said, and speaking to the guys who know. So, I mean, what was your mindset when it started, when that first day, and it said, I don't know, $100, or where was it?
I think it goes, like, just to take a step back for those that are possibly really new to the crypto space. So if you understand the dynamics of what Bitcoin is and how it works, when we talk about mining, there has to be some sort of work associated to create Bitcoin. And that's what gives it its perceived value. So if you're having to solve an algorithm, which is open source, it's on the blockchain, which means that if I'm sending Bitcoin from myself to you, there's a sequence of events that need to happen. That needs to be open source, and it needs to be for everyone's eyes to be seen. It's out there, it's viewable on the blockchain.
I'm 90% with you. Keep going.
So to complete that transaction, there has to be some perceivable work that's done. And by the miners solving that algorithm, which verifies the transaction itself, they unlock Bitcoin in terms of a reward. And by unlocking that reward, that obviously increases the supply that's available in the market, but it also incentivizes them to do the work. So that's exactly what this machine was. This was, in theory, it's a miner. It was a piece of hardware that assisted in verifying transactions. And by verifying transactions, for doing the bit of work that it was doing, it received a percentage of a reward. So for every block that was mined, for the work that you did in mining that block, you received a percentage of that block reward. So this L3 miner, it ran on the Litecoin algorithm. So the rewards were paid out.
Did you choose?
No. This specific miner that we purchased, the L3, was specific to Litecoin. So we purchased it knowing that we would be mining Litecoin. And of course, once you receive the Litecoin, you can convert that to Bitcoin or any other cryptocurrency that you wanted. So we received Litecoin, plugged it in the wall, piece of hardware, like I said, kind of like a PS4 or like any, desktop computer. It was no bigger than a PS4. Generated quite a large amount of heat. As you can imagine, it's running 24 hours a day, 7 days a week. Drew quite a bit of electricity, but it was cost positive. So electricity bill plus obviously the running costs were covered completely by the income it was receiving. Plus, obviously, once you have to pay the capital cost up front. Like I said, within about 6 weeks, we had paid off this machine. So we got quite excited about that. Now we're like, okay, what happens is every time Bitman, which is the company that produced these miners, they kind of had staged releases. So there was like a phase 1 release, phase 2 release, phase 3 release. If you managed to get in on phase 1, the technology within these miners was so superior that you were getting such high returns, it was a no-brainer to buy the machinery. So started with the L3, proved that the concept works. 3-4 months later, Bitmain launched the D3, which was now going to be another miner which focused on Dash, or on I think it was the SHA-256 algorithm. So there were a few coins that you could have mined. Dash was the prominent one at the time, and we managed to get in on the first phase. So we decided, taking it back a step, if you can imagine a Justin Bieber concert here in South Africa, and you're going to go onto the website and you want to book yourself a ticket, it's the same sort of thing. So all of these guys around the world are just waiting for the release of this phase 1, and the moment they release, they're going to jump onto the site, and they're going to try and book and purchase as many of these machines as possible. So I sat online, Andre sat online, we had a couple of other guys sit online. The moment it went live, we tried to see if we could get our hands on any of these machines. Fortunately enough, we did. So again, we made a second purchase of these D3s.
How many?
50.
Oh, wow.
Yeah, so we actually...
You bought 50 physical machines.
50 physical mining machines. So that later went up to, in total, we were running, I think, just over 100. I think it could have been 105. But of course, once you have that amount of hardware, you need to obviously build a specific room to handle that. And with that, the electricity that's required for that, obviously the reduction of heat, because they produce such a large amount of heat that you need extractor fans and. So it became quite a large capital investment. In hindsight, we would have been a million times better off just physically investing in Bitcoin or Litecoin or Dash at the time because of the appreciation we've seen to date. But that was a learning curve. So that was something, it was paying school fees. We got excited. We saw what was happening in the market. We had made some crypto investments that were exploding. We made the L3 investment, paid itself off in next to no time, and was continually making money. We were like, great, got into the D3s. We started making some really good money. But then we started noticing that the hash rate was going up, which meant that your profitability was coming down. And then it got to a point where you started factoring in Eskom and the downtime and electricity tariffs and increases. And it got to a point where it wasn't feasible for us to actually run the machines because they weren't profitable anymore. So we needed the price of Bitcoin to appreciate higher so that even that small percentage that we were generating on a day was greater than our expenses. So there was a real big learning curve from the mining side of things. But through that, I really learned a lot about crypto as a whole. So then going back to where you spoke about the evolution of that and now where we are today. So to get onto the trading side of things, that was more COVID related. So here was something that really piqued my interest. It became a hobby where I was just doing research to understand the market, understanding, almost investment protection, so to speak. So I was staying on top of it to protect the investment that I've made in crypto, purely because I had seen what happened in 2017. And I was like, well, I'm going to try and time the market better this time, if need be. So I can cash out high, rebuy low, and obviously reap the reward. So focusing on the market, YouTube is a great place to learn. There's some phenomenal guys out there that are producing content on a daily basis, so educational. And then when COVID hit, I was like, you know what? I can sit back and I can watch Netflix and I can, just get lazy. Alternatively, I can upskill myself. And I never really came from a trading background. I did some online Forex trading courses previously a couple of years ago, just out of interest. I'm really good with numbers. So I figured, you know what? It's a hobby. Let's turn it into a little bit of a passion project and let's see where it can go. And started upskilling myself just in terms of watching more content on YouTube, understanding trading itself, technical analysis, your support, your resistance, your candle patterns, all of the basics.
This is all terminology which you
exactly.
The only way to get involved is to dive in deep.
Exactly. And like I said, YouTube has been a great a learning platform for me. So there's a few guys which I started watching. I'll mention for the audience out there that are interested. There's a guy called The Moon, Carl, really good. Crypto, really good. Ivan on Tech. Ivan on Tech's really interesting because he's an incredibly smart, tech-savvy guy. He's probably mid to late 20s. I think he started off doing an apprenticeship for Sony Ericsson. He's Swedish. Started doing an apprenticeship for Sony Ericsson at the age of 17, 18. They ended up employing him as one of their leading tech developers. He had an incredibly successful career at Sony Ericsson in his early 20s. Branched off, started doing his own thing, one of which is his YouTube channel, which is also on his website now, ivanontech.com, I think it is. But just a pure brain for crypto, for altcoins, for NFTs, DeFi, like literally anything in that crypto space. He's just a wealth of knowledge. So Ivan on Tech, Crypto, Call the Moon. And then from a trading perspective, there's guys like Team Underground, Mitch Ray, which again, I spend most of my days watching every one of these guys' daily uploads.
You told me when we first met a few weeks ago, how many hours of the first hour or first 2 hours of your day you just watch these YouTube videos?
So to be honest, it's actually almost the opposite. It's almost like the last 2 hours of my day.
Okay, because in the States.
Yeah, exactly. So a lot of these guys, like Ivan, Carl, they're both Swedish. Crypto is German, but these guys are making so much money. They're actually just traveling the world now, specifically during COVID. And they got the luxury of, flying to spend 6 months in Thailand and recording remotely out of Thailand. I think Crypto now is in Mexico at the moment. He's got a residence in Dubai as well. So he's like constantly traveling. And of course, when they push out their content, if you're subscribed, you get notifications of when their videos go live, you watch it. But the daily close here in South Africa of, the charts is at 2 a.m. at the moment. It's GMT time pretty much. Okay. So 2 a.m. is the daily close. I enjoy watching, when I'm trading and I'm looking at the charts, I like to see what the daily candles are doing when the new day starts. I think there's an opportunity to make some money on that as well. So Mitch Ray, which is a guy I watch religiously, he's incredibly good at what he does. He's a trader by nature. Traditional trader, trading stocks and everything else, commodities. And he obviously branched into crypto. So he's using traditional technical analysis on what you would consider an untraditional market like crypto. Crypto is incredibly volatile, but by applying the technical analysis that he does to traditional markets, with the volatility, there's opportunity to make really big gains. And of course, when you're trading, it doesn't just mean that Bitcoin needs to appreciate. If Bitcoin's going to retrace, you can make money on that retrace by almost shorting Bitcoin. So he's a guy I watch religiously. He's based in the States and he only goes live at 1 a.m. So I enjoy watching him live, just purely because the opportunity is in the timing. So a bit of a night owl by nature. So it just kind of makes sense that if I'm up and I'm interested, I'm going to watch. Of course, because it's on YouTube, you can always recap and watch it the following day. But as it stands, he's definitely one of the guys that resonates with me and what he does. His analysis is fantastic. And just by watching him, I've upskilled so much to a point where I'm confidently making trades by myself in terms of settings, stop losses, understanding my risk versus reward, where my take profit zones are, and setting trade orders up, going to bed at night comfortably, waking up the next morning to realize something's triggered. And it's not a panic that I have to sit on the computer and watch it, religiously every minute of the day, because I know that I've set up my trade in a manner that I'm going to be okay. If it goes against me, maybe I've got a 1 to 4 risk reward. So it means for every one trade I get wrong, it's okay. I can get 3 wrong trades. I make 1 right trade. I'm breaking even. Yeah. So I've kind of, like I said, upskilled to a point where I've gone from being just someone who's interested in crypto and having a hobby in crypto to now actively earning a good income through trading. And that was just purely through, taking the opportunity that I had and the additional hours in a day that were given to us through COVID.
Okay. I literally haven't said a word in the last, I don't know how many minutes. So I'm just going to crack open my next beer.
Do it. Once you get me talking, I can get talking.
No,
I don't talk about crypto much, so when I do, I get going.
Basically, what I got from that was a few things, but it seems like you really are committed to that at 1 a.m. slots, to see what's happening, and for good reasons. If you're going to make a few extra bob here and there, why wouldn't you wake up at 1 a.m.?
You know what it is? If I can just stop you there for a second.
Yeah.
It's self-empowering. I'm not reliant on someone to pay me a salary at the end of the month. I'm not reliant on having to do phenomenal things within my business to create new business to earn income. When I look at crypto trading, it's about if I upskill myself enough, I'm self-reliant on earning an income. It's making profit is purely based on me. I sit there and I watch, and if there's a trade setup that I like and everything is screaming buy, I buy. The length of time I'm in that trade is up to me. If I make $10, I can cash out at $10 and I made 150 Rand for the day. That's great. You're still talking about 4,500 Rand a month if you can successfully do that for 30 days. You can make $10 in 15 seconds trading. I'm not saying that everyone should just suddenly just consider trading, because it's incredibly risky and it is super volatile. And
I will give a disclaimer at the beginning of this message.
Please do, because there is a fact that goes around that 90% of traders lose 90% of their bank in the first 90 days, which is true. I lost quite a bit of money in the beginning, obviously, but that goes down to being your school fees where you're kind of learning. But what I like about trading is that it gives me that freedom of I'm self-reliant. It doesn't matter about whether I got a PhD or not. It doesn't matter if I've got a matric or not. If I learn the charts and I understand the patterns and what certain patterns mean, and you can really upskill yourself to be self-reliant in terms of making an income. The crypto markets are open 24 hours a day, 7 days a week. And if you're scalping, or if you're day trading, or if you're long-term trading, the opportunity is there within yourself to make money. So it can become a self-reliant sort of business where you're not reliant on an employer paying you a salary at the end of the month.
It is still overwhelming when you do, as you said, go down the rabbit hole and trying to discover technical analysis. I mean, Google's a great place to start, but still then it's overwhelming in terms of the number of tabs that you have open and the spreadsheets and the tips and the clues. But I suppose there is only one way to get into it, and that is just diving in and just
trial by error
and go in, paying your school fees, signing up to certain things, and again, not putting on the line what you're not willing to lose. Because I think that's a big lesson. And I think that's quite sound or common advice, which you would expect a lot of people to follow through with. But as I've experienced in the last few weeks, months, trading is very emotional. There's a lot of emotion that you let sink in. And I've already told myself, don't be emotional. You need to have your structures and your plan set up so that you make yourself less risk averse to those emotional decisions. But I kind of wanted to talk about talk in general in just terms of this new trading, this crypto trading, which is, I think it's overwhelming, because I think a lot of people see, when they think of trading, they think of those New York stock exchanges of people trading, and what is that? Why should I get involved in that? And is it different? But I suppose it's a lot of the fundamentals are still there. They carry over. There might just be a lot of news around crypto. I think it is a new and exciting market. So that's, I think, why it's getting so much attention at the moment. But it is essentially trading on the JSE, trading on the Dow Jones. I mean, I'm just
100% right.
But it's, yeah, I think there are those risks, but it is an exciting place because there's just there are a lot of people who are promoting, going to the moon, so to speak. That's the lingo that I've heard.
Yeah, definitely.
When people say they're going to the moon, it means that they're 100x their portfolio or their investments.
They got enough money to go buy a Lambo. That's another one. When Lambo, that's another word that always gets thrown out.
Okay, I'm learning something here. But
I think just to stop you there for a second, one of the important things to remember is trading is a zero-sum game. For every winner, there's a loser. For everyone who's making a profit, they're taking someone else's losses. It's a zero-sum game. They have to equal each other out. So effectively, smart traders are making money off the ignorant trader. And, it's a zero-sum game ultimately. So it's incredibly risky. And obviously, the more skilled you are, the more money you can potentially make. And it's very much the same when it comes to, as you said, trading traditional stocks. Guys, that's what inside trading is. When people talk about inside trading, it's people who know what's going on and they're able to make trades off that because they're going to take the profits off other individuals. And effectively, when it comes down to crypto, it's those that are new in the market that are just throwing money in, potentially trading without really knowing the fundamentals and the technicals. Those are the guys that then end up losing money. To the skilled guys who have paid their school fees, who have stuck it out, probably lost some money in the beginning, but have upskilled themselves to a point where they're starting to make good money. So that's the risk side of things. When you talk about trading, I look at it as two different factors. There's trading in terms of buying Bitcoin and then looking at maybe Bitcoin to another coin, so say Bitcoin, Ethereum, and you look at the performance between the two. So now it's a question of saying, well, I think Ethereum is outperforming Bitcoin in terms of growth. So you'll look at Bitcoin USD, you'll look at Ethereum USD, and then you'll look at Bitcoin Ethereum, and you'll be able to plot. So maybe Ethereum's going up exponentially in dollar value, and you think, wow, that's great. But if you look at the Bitcoin Ethereum chart, Ethereum might be losing value to Bitcoin, which means that you're better off investing in Bitcoin because ultimately it's appreciating faster.
Yeah.
So there's trading within just buying an individual coin for face value.
You lighten up my mind now, just in terms of my portfolio that I've got, and I'm just thinking, fuck, I need to go check what's happening. Sorry, I interrupted you. Keep going.
No. Yeah, so I think it's always important to revert back to understanding how your particular crypto is comparing against Bitcoin. So you can see huge appreciations in USD, but ultimately the reason we're in crypto is to hedge against USD value. We're seeing the US dollar being devalued with all the money printing that's going on, all these stimulus packages, where your dollar is not as strong as it was yesterday or last year or 5 years ago, purely because of the amount of dollars that are being printed. I think just over this whole COVID, 13, 15 months that we've had of COVID, if I'm not mistaken, we can actually go and Google it and find out, but I think 60% of all US dollar in circulation is printed in the last 18 months. So just put that in perspective. 60% of every physical dollar note that's in circulation was printed in the last 18 months. So with that printing of money, all it's done is devalued the US dollar. And that also plays into why gold went on a proper run, why Bitcoin is exploding, because it's a hedge against inflation. So as much as you might look at Ethereum and Dash and whatever other token that you're interested in and think, wow, it's really going up in USD value, don't forget to compare it back to how it's performing against Bitcoin, because Bitcoin is the store of value. When you start looking at institutions now wanting to invest in crypto, their first dip into the water is going to be Bitcoin before Ethereum, before Dash, before any of the other coins, because Bitcoin has proven itself as the store of value. So don't forget to compare how your asset is performing against Bitcoin, because you might just be better off investing in Bitcoin itself.
I think from my naive perspective, I would only invest in altcoins, as they're referred to, for a short-term profit, a short-term gain. But I've never really thought about it. Again, this is me being naive, and I need to get learned on this kind of thing, comparing it to Bitcoin. Because I know that, and I've heard this from other people before, once you make those profits from your altcoins, you put it straight into Bitcoin, because Bitcoin is the one that's kind of growing. There's so much I want to talk about, and I think I need to be aware of the time, and I think we definitely have a version 2 of this in the not too distant future. I want to shift gears. I want to kind of work our way to NFTs, which is kind of the hot topic at the moment. But before we do that, let's talk about larger institutions investing in Bitcoin. We know that Tesla, Elon Musk, is very big on the social media platforms in terms of investing into Bitcoin. He's talking about giving a lot of hype around this coin called Dogecoin, which is all based, if I'm correct, off a meme. And it's this kind of absurdity which I think it scares a lot of people. But then again, it also speaks to the, not to repeat myself, the absurdity of giving value to a piece of paper and writing $100 on that. You know, why can't you establish a digital currency? But maybe you can just talk about that, about Elon Musk, what you know about Tesla and what you know about these larger institutions buying into Bitcoin. What are your thoughts on that?
I think that's certainly one of the reasons I got into crypto itself so early, was understanding that 21 million cap supply. That's it. There's only ever going to be 21 million Bitcoins mined. That's all that will ever be available. When you start
21 physical, well
not physical,
so
yeah, digital
21 million
Bitcoins.
coins.
That's it.
A whole coin.
Done. So when you start doing the maths on that and you think to yourself, well, how many millionaires are there in the world? There's more than 21 million millionaires. That means not every one of those guys will be able to own one Bitcoin at some stage, which means that the demand is going to exceed the supply, which means the value has to go up. And that was part of the rationale that I adopted to start initially investing, thinking to myself, well, risky, yes, but let's see where it goes. The upside could be exponential. And then based on the track record of from 2008, building up to 2016, when I started looking at it, I was like, wow, the first ever Bitcoin transaction was a guy bought 2 pizzas for 10,000 Bitcoin. He put it out there on Reddit. He's gonna deliver me 2 pizzas. I'll pay you 10,000 Bitcoin. Just think about what those 2 pizzas are worth today, retrospectively, when you look at it.
Must have been one tasty pizza.
Yeah, we hit an all-time high today. We just cracked $60,000 per Bitcoin. This guy paid 10,000 Bitcoin. Yeah. I mean, it's mind-blowing. So just by seeing that growth, I was prepared to take a bit of a punt on it. And when I look at it now, and I think to myself, you got the likes of Elon Musk we're talking about, but even before Elon, there was a guy called Michael Saylor. He's the CEO of a company called Grayscale. He invested $1.25 billion into Bitcoin at the previous all-time high, $20,000.
Okay.
So it got to $20,000. He still took out $1.25 billion from his company's balance sheet and was like, we're converting our balance sheet to Bitcoin. We're taking it away from USD, we're converting it to Bitcoin. Since then, he's probably made 2 more purchases. So he's probably close to about $3 billion in Bitcoin. But if you look at how...
When was that? When did he do that?
All in the last 6 months. So this is going back, I think he's... September was his first, I think 1.25 billion purchase was in September 2020. Mm-hmm. And he's continually purchased since. Since then, he's also spoken to multiple CEOs in industry about how they can convert their balance sheet into Bitcoin, from USD to Bitcoin, including Elon, pre-Elon, obviously, taking some of the Tesla portfolio and purchasing Bitcoin. And that gives me a lot of hope, because now all of a sudden you start thinking about it. Well, now we've got PayPal, we've got Grayscale, we've got Tesla. At what stage are you going to start getting Google, Microsoft, Facebook, and the likes, Amazon, when you start talking about all of those guys wanting to invest $1 billion, all it's going to do is throttle the supply.
Yeah.
And the moment it throttles the supply, don't be surprised when we're talking about a $60,000 Bitcoin today. Tomorrow we're talking about a $100,000 Bitcoin, because it happens. It only takes one or two institutions to do that.
Yeah.
Secondly, the moment Grayscale made it public knowledge that they've invested $1.25 billion of their balance sheet into Bitcoin from a company that's sitting on the stock exchange, it now made it possible for hedge funds and institutional investors to invest in Bitcoin via Grayscale.
Okay,
So if you look at the Grayscale share price, which had been sitting stagnant for 36 months, it had been trading between a small price range. If I'm not mistaken, it was like $2.50 and $3 for 36 months. The moment it became public knowledge that they had converted their balance sheet, a percentage of their balance sheet to Bitcoin, their share price went up 60%. And the reason being was now hedge funds could invest in Grayscale as a company, but benefit from the appreciation of their balance sheet on Bitcoin. So that's where, like,
and a small percentage. So it wasn't
correct
all risk. It
Correct.
was Why
so
wouldn't
a calculated risk, really.
Yeah.
So that's where it started off. And then from Grayscale, then PayPal made an announcement. Then all of a sudden, Elon's made an announcement. And I only see more regulation coming in play. I only see bigger companies, well, not necessarily bigger, but more companies looking at converting a percentage of their balance sheet into Bitcoin as a hedge against inflation, as a hedge against the devaluation of the US dollar by the constant, reprinting of money. And when that happens, crypto is just going to continue to run. But people need to be aware that obviously everything is secular. Those guys are going to, when we start seeing $100,000 Bitcoin, don't forget those guys who bought in at $10,000 are going to start wanting to take some profits off the table.
No.
So once they've got a 10x, they'll start selling. And when selling happens, you can get the panic sell, as we've seen in 2017. You see the crash, but the market will turn.
I wonder how many guys have set up that automatic sell function on their trading platform when it reaches 101.
Totally.
And when it reaches that, just to sell.
So just personally, from my trading experience, like I'll look at charts and I'll look at patterns, and say we've got for those who understand technical analysis, say you've got a head and shoulders pattern. So the head and shoulders pattern is formed. It's evident on the daily. It's evident on the 4 hour. It's very likely that it's going to break out. It breaks out. Now you have a target price.
When you say breakout, does that go up or what?
It can break. So head and shoulders generally breaks down.
So literally a head and shoulders figure.
Yeah. So you'll have a left shoulder, which it peaks at X. You'll have the head, which peaks at X plus 20%.
Sure.
Right shoulder peaks at X.
Yeah.
And then fundamentally what happens is from the neckline to the peak, you draw a line, you put that on the shoulder, the neckline again, and that's how far it's going to drop. Inverse head and shoulders, the opposite of that. It's head and shoulders just upside down, and the breakout is to the upside, and you see what your measured move is going to be. And quite often you'll see in a chart that, say hypothetically, the head and shoulders or the inverted head and shoulders is going to break the $50,000 mark. So the target price should be $52,000. The moment it gets to that psychological $50,000 limit, boom, things start stagnating. So in theory, based on the technical analysis, you should be breaking through that. But it doesn't break through it as strongly as you would expect because of the psychological $5, $10, $15, $20,000 limit. So the moment it gets to 50, that's a huge psychological limit where guys have said to themselves, I bought in at 10, 12, 15, 20, $25,000. I'll sell at 50. And they set their sell orders and that automatically triggers. So regardless of what the technical analysis is screaming where the market's going to go, you got to be aware that on those psychological levels, there's a chance of it reversing or stagnating. So like 50 was obviously a big one recently, at least.
Yeah, definitely. Sure. I won't lie. You kind of lost me there, but then I managed to come back into it. So I'm just thinking of all my listeners thinking, Troy, what the fuck is going on here? I think that's enough talk for crypto. I did want to know a little bit about Dogecoin, but I think we can talk about it another time because I think it's it's still one of those coins that is just...
Well, very quickly, Dogecoin is very simple. Dogecoin was someone just having the ability to create a cryptocurrency. They had the technical mindset, they had the coding background, and they were like, you know what, as a joke, I'm going to create this coin. We're going to call it Doge, and we're going to base it off a dog, which was a meme, which is very popular in Asia. So that's where it originated from. It was just really a pure joke from someone who had the technical ability to create a crypto. And then it stuck around, there was like with any fad, there's a little bit of hype about it because it was a popular meme at the time, just like you have your, what's this game where people are running around with their cell phones trying to catch things? Pokemons, yeah, exactly. Just like that became a fad. Doge was a little bit of a fad at the time. And then Elon Musk, being the character that he is, and he's quite controversial on Twitter, and he's very playful. He just tweeted something about Dogecoin being the future of crypto. Next minute, boom, there was 100% appreciation in the coin. And then guys were like, whoa, we've got to start obviously taking this a little bit more seriously. There's nothing associated in terms of value other than it's a joke meme coin. But because Elon has tweeted about it more than once now, it's shot up exponentially in value that it's almost something that it's worth taking a punt on, just holding it in your portfolio. Spend a little bit of money on it, forget about it, write that money off, but look at your portfolio in 6 months, 2 years, 5 years time, and you might get a surprise. And that's what Doge is effectively.
It's a nice segue because we're talking there about the market. We're talking about people who are in the market who are willing to buy, which forces the interest to increase, which in turn creates that higher price or demand, which is a great segue to NFTs and what's happening in the market at the moment. I've become very excited about these non-fungible tokens. If you're not sure about what an NFT is, please, there's this great website called Google. Just type it in, what is an NFT, and you'll be hit with a tidal wave of articles. But what I've seen with these NFTs is what goes hand in hand with these non-fungible tokens. Let me just call them tokens to be short. Is that it goes hand in hand with the market and what people are willing to buy for something. And I think it's quite poetic that we're talking to you, a former professional sports star who has his own company in memorabilia, or sees the value in owning that unique rugby jersey, that unique soccer jersey, depending on what where your interest lies and what kind of disposable income you have. I think especially now in the current landscape of South Africa, the current landscape of the world where people aren't traveling, there's this income for those of us who are fortunate enough to have a good salary, where we would be spending it on certain items. We're not spending it anymore on travel. Point in case is my friend who works at a car shop. He says the car sales are going through the roof because people have that extra income now to buy nicer cars. So it's going back, tying myself back to what we're talking about with NFTs. It looks like it's not. It feels so much like a bubble. It feels so much like this thing is going to pop. But even if it does pop, these NFTs, it feels like they're still going to be there tomorrow. They're still going to have a bit of hype in 10 years' time. But I know that do you own any NFTs, or are you thinking about it? What's your kind of approach to looking at this thing, which has got firstly a lot of hype, but also in terms of making investments? What's your kind of gut feel?
So I think NFT is the new buzzword. So in 2017, we had the ICO, initial coin offerings. There was a huge buzz around ICO. I think NFT very much along those lines now. I think that's why we're seeing coins that are associated to NFTs exploding. I myself, I haven't invested in any sort of product itself, but I have obviously invested in coins that work off of the NFT playing space or the ecosystem. So there are the Polkadots, Cardanos, Engine, and there's a few coins which you can start looking at that I've just added to my portfolio. But for me, it's the hype that goes around with who's talking about it. And yes, very much a bubble. But I don't know if you know Gary Vaynerchuk. So Gary V recently.
Gary's one of my guys.
Oh, there we go. So
yeah.
So Gary.
I will say that Gary replied to one of my emails, but that's all. That's my claim to fame.
So obviously Gary V, incredibly well respected, ridiculous entrepreneur, very much finger on the pulse, knowing what's happening. Invested in all of your big startups, from your social media platforms like Instagram back in the day, Ubers, the works. He's finger on the pulse. And he's gone out there recently and he said NFTs, in his opinion, is talking about the magnitude of social media in 2005, 2006. He thinks it's the next big thing. And for someone of his caliber to start, one, endorsing the NFT space kind of makes me believe there's more to it than just a bubble. He's obviously a huge sports fanatic himself. So he owns, if I'm not mistaken, it's a basketball franchise or a football franchise, one of the big franchises in the US. I think it's basketball.
He's a big Jets fan.
Yeah, I think he owns the Jets. I think
he wants to own. That's his life.
I think have a look. I think he's quite a big shareholder within the Jets now. At the moment.
Really?
Yeah. So
I'll go look at that.
I might be wrong, but somewhere in between, there's a middle ground. Okay. He understands the sports market. He understands the NFT space, and he's really delving into NFT as having a big future. For myself, with a tech startup, specifically in sports and sports memorabilia, we actively looking into the NFT space now. We see that as being the evolution of where we're at. We're seeing an opportunity in the NFT space for us to branch out and create new revenue streams. And what I like about the NFT space is it's the digitization of the asset. So if you look at baseball cards, for example, in the US, not that we're very much a US affiliated country, but I'm sure most people know that baseball cards in the US in the 90s had huge amounts of value put on them if it was a first edition or if it was a Babe Ruth or whoever the player was. We're now digitizing that. So you authenticating it as well based on the blockchain. So it's not a question of you've got a first edition. This is the first edition. You've got the blockchain to verify that the card that you own is indeed what it says it is. It's not a knockoff. It's the authentic original.
Got the code behind that. Yeah.
Exactly.
The ledger, which the blockchain is.
Correct.
Behind that.
And that's what's giving it its value. So now we're creating a whole marketplace of verifiable product that's obviously now digitized. And it goes cross-border. It doesn't necessarily need to be sports memorabilia. You've got musicians now creating specific EDM tracks that they're putting out on NFT space. They've got artists creating artwork that, again, it's all authenticated once-off production pieces that are now available to the market. And I think with the verifiability, if that's even a word, of the NFT itself, it creates so much value in a world where there is so much knockoff, scam, what's the best way to describe it? I mean, there's unauthentics running around, but now all of a sudden in the digital space, we're talking about authenticized product. And what you can produce is limitless. Really, what you can produce is limitless.
I do see where now the bubble might exist. This is me taking a stab at it. In terms of that authenticity is super important. But then it comes down to maybe whether arts in general is so subjective. It all depends on what you want. But
demand and supply.
The authenticity, sure, that's one aspect. But the other aspect is whether it's something you enjoy as a piece of art.
Correct.
And I think that's maybe the bubble that's going to burst in the not too distant future, where at the moment
people are getting overly excited. At the moment.
Bless my wife. she says, don't think, just upload something on an NFT website and sell it and see what you can sell it for. But me being of the old school nature with the chalk and pen, whatever technical tools I used to use, I want to create something that's aesthetically pleasing or easy on the eye or nice to enjoy, something that you might not want to display or tangibly or print out. But if it does exist digitally, you could look at it and be, this is beautiful. But I think that's the kind of bubble that's going to pop in the neck. Right now, it's the wild, wild west, and people are just jumping on board and seeing what sticks. But it is still...
It's a fad at the moment. It's the new buzzword. People are they're going crazy over it. And like you said, what's being produced and what's being put out on the marketplace doesn't necessarily have any real value. And that's where the NFT space lies. If you're able to produce a product that has real value behind it, I think you've got a big future. But I'm not the most artistic person. I didn't do well at art at school. I didn't even take art, but when I did have it as a subject, I was terrible. If I had to go and try to create something artistic and put it out on the marketplace, at the moment now, people might start bidding on it just like they start buying Dogecoin, just because,
why not?
There's a bit of a mania around
it.
But when the bubble does pop, should it be classified as a bubble, it will be when the audience becomes mature enough to realize that let's not focus on everything. Let's focus on what real core value products there are in the marketplace that are worth investing in. And just like baseball cards took off, the digitization of specific baseball elements, or for example, the NBA now are playing quite actively in the
Great
NFT
segue.
space.
This is where I was going. So continue.
Yeah, so they're creating artwork around fantastic moments in NBA history. Michael Jordan doing a dunk or whatever it may be. And they're selling that off, and people are interested in owning that piece of authenticated visual effect, which is NBA endorsed. So now all of a sudden, it's like they're owning a piece of NBA history. They're the number one title holder.
Well, I am someone who has recently dived into that NBA TopShot community, where I have purchased a pack. You buy a pack as you would in the old days, go into a CNA or stationery store and spend your money, and you'd get this mystery pack. You'd open up a pack, and then you've got a selection of cards. It still exists to this day. I think it was Panini cards for the soccer stars.
Yeah. I remember.
For the Premier League in England. And now what NBA have done, they've just taken away that physicality. That it's just all digital. You still get that pack in front of you on the screen. You open it, and I've got 3 different players from that. I bought another player just as a test, and so I've got 4 different moments as we speak, as we say. But it's interesting to see the supply and the demand and what people are willing to pay for it. The markets. I mean, I know fuck all about NBA, but I know that there is a massive US listenership listening to this, and they know a lot more about me about NBA. But I think NBA is just the start of a whole bunch of other American sports that are going to start eating up or incorporating that digital moment assets, which is very exciting. And I'm super excited about that. So it's only a matter of time before it goes global, before we start seeing European or, like I said, a global adoption of those sports cards. I have joined.
I'll tell you another reason why that excites me is because if you take, for example, a game like FIFA on PlayStation or Xbox, you've got global audience, like its number one selling game, brings in trillions worth of dollars of sales. But the physical players that are being represented in that game are not necessarily making any money out of that. And recently, Zlatan Ibrahimovic, he took a stand against that and saying who gave FIFA the right, or EA Sports the rights to use his likeness in the game and his name. And because he's contracted to AC Milan and AC Milan had signed in a deal, it was like a lot of gray area. But effectively, he doesn't receive any royalties for millions, if not billions, of people around the world playing a game with his image on. And I think the NFT space is certainly going to evolve to a point where there's going to be benefit to the individuals themselves to reap reward. Cristiano Ronaldo, you want his, his football moment, whether it be UEFA, whether it be FIFA, whether it be Juventus, whatever the association is, because it's got a perceived value and people are prepared to pay, there needs to be royalties attached to that. And I'm excited to see where the space is going to go, because I think it's going to open, it's going to answer a lot of questions which previously were ignored, and it's going to allow for individuals to build their brand. So you got your David Beckhams, who was a prime example of how he went from football to building the David Beckham brand, preceded football and unlocked enormous amounts of revenue. Now all of a sudden there's going to be opportunity for these guys to build their brand in the NFT space, where they're going to get a percentage out of royalties for the monetization of their, Ronaldo scoring a fantastic bicycle kick against Juventus. That moment that got Real Madrid qualified, that's what he's going to be paid for. That mastery that he performed on the field, he'll get a royalty paid back on that, because it's going to be off-sold as an NFT, of which maybe Juventus may get some royalties, but you as the moment owner, is you're gonna hold the value of the title of that moment, but those individuals receiving royalties for playing their part in the chain.
It's actually exhausting to think about how much there is out there with regards to NFT. And I say that with experience, because there was a moment last week or 2 weeks ago where I went deep into the rabbit hole, and the end of the day, I was exhausted in terms of what is possible, what's out there, and
it's hard to comprehend
what can be done. Yeah, when you try and get your head around it, it's maybe me being naive, but I don't know how a motor vehicle works. I know how to drive it. I don't know the combustion and the engine and how that works, but I know that it works and I can get from A to B. So that's how I'm approaching it with this whole new crypto space, this whole digital blockchain, and seeing how far I can go. Grant, Mr. Iggy, I think there's just so much more we can talk about. But we've been talking now for over an hour, and I think my wife is calling. She wants to know what's happening. So I think let's push pause on this conversation. Let's call it a day for now. I think we're definitely going to have you back on for version 2 to see what's happened since we last spoke. But thank you very much for sitting down with us. There wasn't even, we didn't even touch on half the things that we set out to talk about. And I think that's just the nature.
It's the nature of
where we're at.
The crypto space as a whole and where it's going. I think to the listeners that are out there that are completely, they've heard about it, but they're a little bit, hesitant to really go and explore it or put their feet in the water. Don't be mistaken. We're still very early on in terms of adoption. If you start looking at the crypto market cap versus the market cap of gold, or, some of the other assets in the world, or in terms of fiat currency, it's so early on. So don't be despondent thinking
don't get FOMO.
Don't get FOMO, but also don't be despondent thinking, it's beyond me. If I start talking to my parents about technical stuff on a computer, it's beyond me. Don't be despondent, because we are still so early on that you can catch up really quickly. So don't be afraid of it, and don't be afraid to do a little bit of research on it and learning. Yes, we've gone from crypto to trading to NFTs, but that's just the magnitude of the evolution of where we're going. Things are going to change drastically in the next well, let's call it decade. We're in the 20s to 30s now. So in this next decade, things are going to change drastically on the financial side of things. Don't be scared to just go with it, to learn a little bit about it and upskill yourself. But more importantly, it also just shows we don't know what is to come. There is so much to come. Yeah. And as much as you like to think that, I'm relatively in the know of what's happening in crypto, no one is. It's such a fast changing environment. There's so much to learn and there's so much opportunity out there. It's almost impossible to keep your finger on all the pulses that are beating at this stage. So yeah, I would say, like you said, don't FOMO in, because as I said originally, when it comes to trading, zero-sum game. For everyone who's making a profit, someone's losing money somewhere. So the smart money takes the dumb money, for lack of a better phrase. So just be wary that it is highly volatile, the market, for one, and it's incredibly risky. But don't be afraid of it, because there's opportunity in that. But other than that, more than happy to do a second segment. As I said, like, the more we talk about, there's just so much to expand on.
Yeah.
It's almost going to become tiresome to the listener. So
exactly.
We can pick a few points, or if you get any feedback from the community, what they would like to discuss, maybe we can pick a few topics and delve into that. But it's a fast-moving landscape. It's incredibly exciting. For one, the evolution of the fiscal system. To two, the opportunity to be so early in the game that you can reap rewards financially in the future. Three, from being an opportunity to be self-reliant in terms of upskilling yourself to earn an income from trading. There's just so much, for me, so much benefit and so much enrichment to my life since I started focusing on crypto, delving down that rabbit hole, personal development, something that's gone from a hobby to now almost becoming a career. And yeah, it's exciting times to come. So I'm more than happy to discuss it at a later stage.
Yeah, it's the whole dream of a passive income where you let a machine do a work, or you just, the dream is to just sit back on your couch and just watch TV and you earning money. But yeah, we can dive into a whole bunch of more aspects, because I really feel, just by ending the show, that I'm leaving it short.
We'll tell about the listener engagement. Other guys turn off after 15 minutes and they're tired of listening to.
I'll be able to measure that.
After the football engagement, they're like, crypto, we're turning off. But I'm excited. I'm really thankful that we had the opportunity to do this. As I said, as an individual, I don't speak about it much. I think a lot of my close friends know the magnitude of which I've invested in Bitcoin, and ask me advice and everything along those lines. And that's the time I speak about it. I don't actively go talking about Bitcoin. When it came up in conversation with us and leading to this, it was quite exciting for me, but also a little bit scary, because I'm voicing my thoughts, which I haven't necessarily voiced out loud to a wider audience. But it's exciting. I think there's a lot of what's the way to best describe it? There's a lot of opportunity in Bitcoin, or a lot of opportunity in crypto as a whole. It's just a question of, don't be afraid to spend a little bit of time researching it and understanding it. It's nothing to fear. It's just a question of, the more you understand it, the more sense it will make.
I think that's a great place to leave the episode. So I just want to thank you again, Iggy.
Thank you
for joining us. I really enjoyed that.
I'm
exhausted. Yes, and thank you to, I'm not saying thank you to Jack Black, but I had to go and purchase these. Nudge, nudge, wink, wink, Jack Black. But yeah, definitely beer that I will continue to purchase.
Went down well.
Yeah. Grant, thank you very much. And we'll try and get a lot of the show notes, what you suggested, or those people that you recommended we watch. We'll get those into the show notes. And to all the listeners, thank you very much for tuning in, and we'll see you again on the next show. Thank you very much. Cheers.